5 defensive stocks for your portfolio in times of economic uncertainty. Welcome back to Rainbow Investing, where we examine a spectrum of ideas to increase your long-term wealth. Now, as I mentioned today, we're going to be looking at 5 stocks that you can hold in your portfolio that will weather any kind of stock market turmoil over the long run. Now, I say this because the 5 businesses that I'm going to talk about are businesses that have intrinsic characteristics that really protect them from what happens in an economic recession or a stock market downturn. And I'll go through each one and explain why. So let's get right into it. Okay, so the first stock I want to talk about tonight is Woolworths. Now, I'm sure that everyone watching knows what Woolworths is, but just a refresher, Woolworths is one of the largest supermarket chains in Australia. They basically have a duopoly with Coles for the grocery market in Australia. But what you might not know is that Woolworths actually owns Big W, Dan Murphy's, BWS, those two sell alcohol and spirits, and they've also got quite a large portfolio of pubs in Australia. So they actually own or lease the land that has pubs on them. So the reason why I like Woolworths for a stock market downturn is because Woolworths sells groceries and everybody needs to eat. And in particular, if people are experiencing economic hardship or, other things that might happen in a recession, like they lose their job, Woolworths is actually very appealing because it's pretty much the cheapest place you can get food. So Woolworths is not likely to suffer a huge setback if there's an economic recession or a stock market downturn. And even across their other portfolios, Big W is a discount store, BWS and Dan Murphy sell alcohol, they're notoriously recession-proof commodities, as are pubs. So that's the main reason I like Woolworths. Okay, stock number 2 is actually quite similar, or at least it was until a few months ago. Wesfarmers. Now, you might not have heard of Wesfarmers, but until November last year, Wesfarmers actually owned Coles. So there actually used to be a direct competitor to Woolworths, but Wesfarmers actually spun off Coles. Now it's actually traded on its own on the stock exchange. So what else does Wesfarmers do? Wesfarmers actually own Bunnings, the hardware store, which is a very, very solid, strong business. Bunnings doesn't really have any competitors. Woolworths actually tried to compete with them with their Masters chain. That actually went very, very badly for the Masters, ended up going broke about 2 years ago. Wesfarmers also own Officeworks, Target, Kmart, all quite specialized stores that are very robust. They provide consumer staples and staples for businesses. Wesfarmers actually also own chemical processing plants. They also make fertilizer, and they also own a company that makes gas called Clean Heat. It's like cooking gas. So Wesfarmers are a very, very diversified group, and that's what I like about them. All the things that they sell or their stores sell are consumer staples, things that people need. And again, if there's an economic downturn, people will usually stop shopping at more expensive clothing shops and start shopping at shops like Target and Kmart. Likewise, when they buy appliances or any other household items. So Wesfarmers owns a lot of companies that will prove very, very resilient in times of economic stress or stock market turmoil. And that's the reason why I like Wesfarmers. Okay, stock number 3 is another one that everyone should know. It is the Commonwealth Bank of Australia, ticker symbol CBA. Now, the Commonwealth Bank is actually the largest bank in the Southern Hemisphere. It is a huge, huge bank. And actually, until about 25 years ago, it was actually owned by the Australian government. But now it's a private company. They also own Bankwest, you might have heard of them. They're a smaller bank branch, but they're completely owned by the Commonwealth Bank. Now, the reason why I picked the Commonwealth Bank, and really you can apply this to any of the big 4 banks, is their business model is actually quite resistant to times of economic stress. So much of the bank's portfolios and income come from mortgages, and it's a very depressing fact, but even if people default on their mortgages, what happens? The bank repossesses the house. So when someone has a mortgage, the bank wins either way. They either get interest from the loan paid over a very long period of time, or they get a house. So particularly large banks like the Commonwealth Bank are very, very resistant to economic stress. And this has been made all the more safer after the last global financial crisis, because the governments have introduced a lot of regulations to make sure that banks can't really fail like many of them did overseas during the GFC. So I'd say that any of the big 4 banks, but particularly Commonwealth Bank, is an extremely safe stock to own through any kind of economic stress or stock market turmoil. Okay, so the 4th stock I want to talk about is one that you probably haven't heard of. It's called Rural Funds Group, ticker symbol RFF. Now, Rural Funds Group is what we call a real estate investment trust, or REIT for short. So it basically means that the company just owns a bunch of land and they collect rent from that land, and that rent runs the company. It's a business that owns land. Now, Rural Funds Group their primary business is farmland. So they own a whole bunch of farms throughout the country, and they basically lease the land to farmers who then grow crops on the farm. So it's a very, very stable business model because, as I said earlier, we all need food. Food and food producing land is a very, very stable and consistent asset to own. And that's why I really like Rural Funds Group. So Rural Funds Group own mainly farms that produce chicken, tree nuts, so anything that's not peanuts basically, vineyards used to make wine, cotton, and cattle or cows. So those 5 things are mainly what Rural Funds Group focus on. And as you can tell, they're all very, very staple food groups. So the demand for any of those things isn't really going to go down anytime soon, and especially not during times of economic turmoil. They might have a bit more of a problem if they grew avocados, but they don't, so it's all good. So that's why I really like Rural Funds Group. So the last company that I've got is something that everyone should recognize. It is Coca-Cola Amatil. Now, this isn't actually the Coca-Cola company. That company is headquartered in America, as most people would probably know. But Coca-Cola Amatil is actually a subsidiary of Coca-Cola Company. So Coca-Cola Amatil is responsible for distributing Coca-Cola's products in Australia, New Zealand, Indonesia, and a couple of other countries, mainly in the Asia Pacific region. So as you probably know, Coca-Cola makes Coke, Diet Coke, Coke no sugar, Lift, Sprite, and Fanta. But they also own or bottle a whole bunch of other different kinds of drinks. So you might not know this, but they do Powerade, Mother, the energy drink, Barista Brothers coffee, or iced coffee I should say. And they actually bottle a whole bunch of spirits and beers as well. I know Jim Beam is one of them. I'll put up a list and you can have a look, because their product range is actually quite massive. They also do Mount Franklin water. And they're also involved in fruit processing. So any brands under the SPC label, Coca-Cola Amatil owns. So obviously this gives them a very wide portfolio in the food and beverage industry. And of course, as we discussed earlier, this also means that the company is very resistant to economic downturns or stock market turmoil, because people are still going to want to buy Coke, water, canned fruit, even Mother, no matter the economic conditions or the stock market conditions. So that gives Coca-Cola Amatil a very, very robust business model, and it's something that I really look for in a company if I'm investing for the long term. So here you have it, guys, my 5 defensive investments for times of economic stress or stock market turmoil. Now, one more thing I should mention about these 5 stocks is they all pay very healthy dividends, which is a really important factor if you're thinking about stock market turmoil, because it can really help blunt the edge of a stock market crash on your portfolio. Because no matter what the stock market is doing, these dividends will still all be rolling in every 6 months. So that can really help boost your portfolio in times of stress. Alright guys, thanks so much for watching. I hope you liked this video. Hit the thumbs up, hit the subscribe if you did. I'll be back soon with some more videos, but for now, good night.